Accounting in lay terms is just recording of your transactions, bringing your transactions together as lay as possible. You don't have to be an accountant to be able to do that. You can just have a notebook. I always advise non-accountants, just have a notebook. Practice the art of recording all your transactions. Make sure it's a hardcover notebook. Practice the art of recording all your transactions. I bought A, I sold B. Just practice that art, and you're already an accountant. The process of tracking, recording, reporting of financial transactions. That's the dictionary definition. But in lay terms, just get a notebook and write all your transactions down. So I'd like to also say, what are your source documents that you need to get together as an entrepreneur? One, I'll also advise that you must have bank statements. And when you're recording, you're doing a transaction via your bank statements, I always advise, don't use USSD. Rather, use a mobile app where you have a comment section and you can write down the narratives of the transaction. For instance, if you're inviting a third party to come and audit your books, or you are outsourcing the accounting function to an outsider, they may not know that, okay, maybe the transaction will say X amount was paid to Mr. XYZ. But as the third party, I don't know who Mr. XYZ, this thing is not working, I don't think. I don't know who Mr. XYZ is. But if you now put the narrative, XYZ for, I purchased maybe tissue paper, or I bought groceries, or for whatever reason. So it makes it easier for whoever is checking the books to know what exactly these expenses were incurred for. Am I making some sense? So it makes it a lot easier for everybody to understand. Another source document we all need to have are your invoices and your receipts. As much as possible, it may not be so possible to get every detail for all your transactions, for receipts for them. But in most cases, we always encourage everybody, all taxpayers, to make sure that you get all your invoices and your support documents. For support, at the end of the day, it's not only for tax reasons, it's for accountability. And especially when the taxman comes, if there's nothing to prove, you may actually have incurred and genuinely incurred these expenses. If there's no support for it, I tell you, the taxman has every right to disallow such expenses and will tax you even though you have expended that, genuinely incurred that expense. So we need to encourage you and to educate you as to the reasons why it is important to support every transaction with source documents and receipts as well as your invoices. I made mention about bank statements. You should also have your bank statements. Then additionally, as part of the recording, you should have your ledgers, your bank book, where you can just record all your bank transactions. You should also keep an imprest, which is a float, aside from everyday expenditure. You may not want to be going to the bank every day and be doing, 50 naira here, 100 naira there. You can just do a bulk withdrawal for your imprest and then maintain the imprest separate from the main transactions on the bank statement. And then every period, you can do a reconciliation of the imprest and then before you now add more to it, replenish. Then another point I'd like to make note of is, as part of the recording, a lot of entrepreneurs, I'm so used to saying taxpayers, we're all taxpayers anyway, they may understand what it is to record, okay, I have this expense, I have this income. But what about recording for your receivables as well as your payables? That's where it might be a bit difficult. In accounting, we record both cash and credit sales are sales. What cash sales means is that you have made this transaction and you have collected your cash. Whether they paid you by cash or they paid you via bank, irrespective, they have been paid. The other leg is this, which can be a bit tricky. The fact that you have not collected payment doesn't mean that the sale has not been effected. But a lot of entrepreneurs, they forget to record that particular transaction. And that's where they miss it. And at the end of the day, they begin to look for the money that is not lost. So you must have a journal where you record that transaction. And I would like here to break the different types of businesses. We have the product and the service together as one. We have the full service, which is maybe an intangible service, like the one that we are offering here. It's an intangible service. We also have a solely product service where you can just do just trading, buying and selling. So of all of these categories, it's important that we understand how we can manage the transactions and record it appropriately. So going back to our receivables, we need to record all our credit transactions and make sure item by item, write the name of the customer and how much they are owing. And what is the limit of the credit that you are extending to that customer? Some customers, maybe some entrepreneurs, they may be so eager. Oh, I want to sell, I want to do this. You carry all your inventory and you give it to your customer. At the end of the day, you go to look for them the day after. The shop is empty. They've run away. It's better you have your inventory. You are looking at it in your office or in your shop than for it to be somewhere and you are thinking that you have made the sale. Until you have actually the money has actually entered into your bank. It's not a full sale, even though we recognize it as a sale, because it can go bad. And once it goes bad, what you have recorded as an income, you have to go back and put it and record it as a loss against that income. So at the end of the day, you are losing out. Are we getting it? So it's good to extend credit, but at the same time, we need to have some bit of measure it in such a way that we're not losing out. A lot of businesses thrive on credit. Look at the likes of Dangote. It's not his money that is using to make all these trades. It's not. And it's free money because there's no interest on it. Except the ones he gets from the bank. So it's very, very necessary that these things have come to stay, they help our businesses, but we have to know how to manage it effectively. Then I go to schedules. Entrepreneurs will also have a schedule. We can maintain schedules of maybe your salary, things that you alone know about, which you can also provide information to whoever is going to help you prepare the accounts. Your salary schedule, your rent schedule, your payroll, your fixed asset schedule, and all of that. You need to have all of those ones, and then maybe from there, the accountant can assist you on how we can do the depreciation and all the provisions for that period. After we have sourced all this, put all this information together, we now report it. Which brings us back to the essence of why we need to analyze properly the details of the transactions, such that at the time the auditor or the accountant or whoever it is that is reporting these transactions, it's easy for them to post. For instance, you say, okay, this person bought this for this amount. When he's posting the transactions, he knows that this particular cost center, we have bought envelopes, we have bought stationery, we have paid for salaries, because it has actually been detailed. So it's easy for us to report that particular transaction. And when we're done with the reporting, we generate a trial balance to ensure that our postings are balanced before we now generate either a profit or loss account, a balance sheet, or a cash flow statement. Sometimes, in most cases, there's a difference between your net profit figure and your cash balance or your bank balance. The reason is that, take for instance, you are netting a profit of 10 million at the end of any period, and your bank balance is telling you you have 6 million, and you're wondering why. Nothing is missing. The reason is that you have receivables somewhere which you are yet to collect. Let me explain that. Remember, when you are reporting your sales, you included your credit sales as well as your cash sales. So when you are netting it, the portion of the credit sales is included in your net profits. Meanwhile, it's excluded in your bank balance because you have yet to receive the money from the customer. Am I making some sense?
Yes.
So that explains why sometimes there's a difference between your net profits and your bank balances. And the inverse also for payables, amounts that you're owing your vendors. Maybe they extended credit to you, and then for which you are yet to pay. Your bank balance is reading 50 million, and your net profit is reading 70 million. And you begin to wonder, why is this differential? It's because you are still owing some people. Are we getting it? So by the time we do that reconciliation, we'll be able to match that difference. And we know that that's the reason for the differences between the net profit and our bank statement. An account should be able to tell a story. And that's the value that an accountant should provide to any entrepreneur. And what is this value? You should be able to analyze and interpret these financial records. Figures in themselves. Okay, I made 50 million this month. Thank you. How does it, what relevance is that? But if you can compare it, maybe to the capital that you invested, maybe you made a profit of 50 million, but the capital you invested is 1 billion. How much is that? That's 0.5%, 0.5%, which is not that. But if you did a profit of 50 million and the capital you invested is 100 million, that's 50%. Is it a wonder why, when you want to venture into any business, the first thing you ask, or you want to buy shares, what is their ROI? Is that not the first question you're going to ask? So when you are reporting as an accountant, you should be able to do so in such a way that anybody who looks at that account, they'll be able to understand it. Because you are expressing it and you are doing comparisons. You benchmark one period with the other. You benchmark one ratio with the other. So that it's telling a story. It should create an aha experience for whoever you are reporting these reports to. So what are the other types of ratios that we can have? For instance, another value analyzing and interpreting a report can give to an entrepreneur is the number of days that you extend to your customers for sales, credit sales. Make sure that if you have to extend at all, make sure that it's within reasonable limit. And also ensure, if you're lucky enough to be able to get vendors who you are transacting business with and they're able to extend credit to you, try and ensure that the credit they extend to you, the credit days that they extend to you is far higher than the credit days that you're extending to your customers. By such, you are managing your cash flow so that you don't have depletion. Because when your monies are tied out there and there's no money to trade with, you run out of cash. And then you begin to panic that there's no business, there's no money. Meanwhile, your money it's because you're not properly managing your cash flow. Also, going back to benchmarking, it helps if you can get a projection or a budget of all your transactions. As the year is going to an end now, some people will probably, by now, they're doing a projection of 2023 financials, both for income, both for all the expenses. It's not cast in concrete, but the issue is that it has to be reasonable. The projection has to be reasonable. You can't just, I'm sorry to say this, maybe it's a roadside vulcanizer now. He's very optimistic. Okay. 2023, I'm going to do 20 million. It's not impossible. But he has to ensure that there's no other vulcanizer around him. And he has to make sure that all the cars, every day, they are punctured. How can you ensure that? No. So what we're trying to say is that make sure that whatever your projections are, make sure that they are reasonable to a large extent. And then when you have these projections, as each month goes by, you compare your actuals with your projection. And then when there's any variance, you analyze this variance. That is very key to the success of any business. When there's no analysis of variance, you can just, everything is okay. Then what's the essence of doing business? How do you check the health of the business? How do you check how well the business is doing? If there's nothing you are comparing with. So you can use projections to do comparison, and then you can now analyze the variances that you observe by reason of these comparisons. So going back to the types of businesses that we may offer, I mentioned about the service that is intangible. The way we report that may be slightly different from the way we report a product and a service business, as well as slightly different from the way we report a trading business. But at the end of the day, we need to ensure the basic things are that make sure that you do your recording, you do your reporting, you do your analyzing, you understand. Sit with your accountant. After he has given you this figure, make sure you engage your accountant. Let them explain the reasons for this ROI. This figure, this analysis, I don't understand. They will explain to you. So that's why some of the times you just get a report. You find it under the table after 3 months. But there's need for a synergy for the accountants to explain, and also for the service, for the entrepreneur to try and understand how well the business is doing. On a final note, I'd like to end with this quote, that for every entrepreneur, especially in Nigeria of today, tough times don't last, but tough people do. But let me add, tough times do last, but tough people last longer. Thank you very much.